Hello everyone. Investrance Research is back again. As a part of Pro Traders series, lastly we had seen what are financial markets and where does stock market stand in this financial markets. So here onwards we'll be beginning our journey of stock market. So always wanted to begin the journey with the history of stock market, right? Just knowing the history is important because you should know uh, where and how the stock market came into existence and these reasons for its existence, right? So whenever people will be talking about stock market history, they will be talking about New York Stock Exchange. But it was way back in 1300s where the real merchant of Venice, who were exporting and importing the goods of say spices and other goods, so they needed more capital to meet the demand because the demand was getting higher when you start exporting or importing. So they didn't they as a company they also required money to build their fleets and boats, right? So what the people used to do, so-called brokers at that point of time, they used to put this information on a slate as a company representative, and they used to ask people who wanted to invest their money. So obviously as the business grew, the money that they have invested also would be returned as a percentage of profits, right? It was kind of shares. Okay. So and coming to the first stock exchange, the first stock exchange was boasted in Belgium, Antwerp, now the transfest capital of the world. So if you're visiting for Tomorrowland, please do visit this stock exchange. So back in 1531, the money lenders and the individuals, so it was an official place where the people who wanted money and the people who wanted to give money or invest money used to meet and the deals used to get finalized, right? So there were no official stocks that were traded like now, but the deals. So exchange is a place where buyers and sellers meet. So it was one of the official place of meeting hands of the business persons and the individuals who were once wanted to invest or raise money, right? So it was kind of official stock exchange. So also East India companies, as East India companies were the biggest company who were spreading their business across the globe. Also in the similar case like Venice, the business of East India company also grew. So they also needed their money to build their fleets, build ports, to offload their goods and other thing, because the East India Company was very big company, right? So it used to export spices or import spices to other places. So lot of business needed lot of capital, right? So East India Company also, what they did was, raised the capital in the form of securities which were traded by people. So they used to give the percentage of profit to the people who had invested their money, and they could also offload their shares of East India companies, right? So but East India Company also faced the issue later. As a part of their risk was, they were attacked by pirates. Few ships were misguided their routes. So all these things happened. So it was risk. So again, it was better for them that instead of investing their company's money, why not trade their capital as in the form of shares and give it to investors, so that the risk is also divided. This is what East India Company also planned. So it was again a kind of trading at that point of time. And the story of London Stock Exchange, how it began was back in coffee shops, right? So in London, the brokers used to sit in coffee shops where they had the information about all the companies that were needed the capital. So people used to go to coffee shops, and there were certain booklets that were kept in the coffee shop which gave information about the company. So suppose an individual wanted to take the share of XYZ company, so he used to read the information about the company and went to certain broker and used to buy that share. Later, which all this broker got registered on London Stock Exchange and started trading securities uh, legally. So that was more legal and authentic procedure, you can say, of trading of securities back in London. So after that, there was South Sea bubble burst. So South Sea bubble, there was one British India company, British again, the British East India Company, which started their business as an first MNC multinational, right? So they started exporting and importing to such a level, and their securities were traded at such a high price because they used to give the entire profits of their company as dividends to the people who had the shares of those company. So the prices were so high of that because everyone was getting profit and everyone wanted that company shares because it was such a bubble and people were talking about it that okay, if you invest in this company you get so much of money, so everybody wanted that, so the prices were so high, so high. So so at certain point of time it created a bubble, right? Someone realized that okay, why someone is paying 5,000 pounds for this particular share? It's the business is not like that. So suddenly the offloading of the stocks and the shares started and the bubble burst, right? So this was the kind of first bubble. So now you might have heard about the financial crisis, the real estate bubble, the Chinese economic bubble, and other stuff. So this was the first bubble, South Sea bubble of British India Company, that created a buzz in the market because the basic psychology of trading is that you know people try to derive the value. If I say that I own a company and it produces gold and it's trading at say 10 rupees, now from tomorrow I say that the gold, if you buy my company's gold, it will give you a big fortune. It has some magical powers and it will give you a big fortune. So what people mentality or psychology will become that oh my god, I need this gold, so people will buy my share at any price, say 20 rupees, 30 rupees, 50 rupees, 100. So they will keep on increasing, and suddenly someone realizes that it goes to 100, and suddenly someone realizes that oh my god, this was the fake news, right? So it will be a bubble that will be created because the value of the stock is not that much, and suddenly the bubble will get burst and the prices will go down, right? So people always derive the value, whatever the price fluctuations you see is that what people want to buy, right? It's not the came into existence with some certain calculations. But if I want to pay certain price for that stock, it's my wish, right? If someone wants to sell at that particular price, it's his wish, right? So it is people who derives these values. Okay. And demand and supply, right? So certainly call it demand and supply. So then came the New York Stock Exchange after all this. So New York Stock Exchange also started people kind of brokers, a group of people who sat behind the buttonwood tree and started trading securities, right? Later there were only certain number of companies that were being traded. So all these East India companies also grew their business to New York, right? So there are a lot of Dutch ships and other ships that were going to New York for trading and all. So there also they started trading, right? So so here, if you know that New York has Wall Street, right? uh, so how Wall Street came into picture, and how the name Wall Street came into picture, because there was a huge wall uh, behind which there was a city, and in front of which there were all the merchant ships and other things that used to take place, all the offloading of goods and other things. And the wall was built, what I have heard was is pretty bad, but they always wanted to keep Indians not entering New York, right? So that's why they built a wall. I don't know how true that is, but this is what I read somewhere. So later this wall was broken, and all the commercial or commerce related things started trading in New York. Later, which came got its name as Wall Street. Okay, because of that huge wall which Dutch people or British people built across New York, right? So then this from the butternut tree, behind the butternut tree where this trading take place, so a lot of brokers and other people were entering into the market. So they didn't really wanted that everyone should be entering in the market, and fake companies or other companies needs to be traded. So they formed and association. The association they went into a building of New York Stock Exchange. So where they got a building, New York Stock Exchange, and where they got those companies listed. They had an open outcry system. So where they traded their securities, not electronically, but just word of mouth. That if someone wants to buy, someone had a representative called as broker who used to trade. Uh, for their investors, right? So this was New York Stock Exchange back in 1773. So how stock market started in India? India, it started in 1850s. The biggest businessmen of India are Gujaratis and Parsis. So under a banyan tree, for Gujaratis and Parsis, they started the stock exchange thing, right? And which really grew up. You can see the uh, expansion, right? You can see the variety of expansion that happened. So this also similarly, like other countries, they started this exchange of securities and shares, as they had the information about these companies. Now also, like, when I was in Bombay Stock Exchange, I used to see people, still sitting in behind a tree, and they're talking about stocks, and they traded from there itself. Even if you go today, you will find people surrounding Bombay Stock Exchange under the tree, so talking about stocks and shares, right? So it's good to see. So back in 1850s, these people started a group, and then they moved to Dalal Street. After, obviously, no business can run just sitting under the tree, so they moved to Dalal Street, where Bombay Stock Exchange is present. Okay, yeah, around 1874, and they also formed a group, and they didn't wanted that everyone shouldn't be entering the stock market, right? So there should be something that needs to control this all the stock exchange and the brokers. So they formed a Native Share and Stockbroker Association in 1875. Okay, so this was the time when things were getting into a plate and quite structurized for a stock exchange, right? So 1874 to 1875 was the transformation of Dalal Street into Bombay Stock Exchange. So it was back in August 31st, 1957, which where Bombay Stock Exchange became the first stock exchange. So Bombay Stock Exchange earlier had an uh, the long building what you see, didn't really had that building, and it was just a round building which had an open outcry system. So what was open outcry system back in Bombay Stock Exchange was that people used to come and shout about their shares, right? If someone wanted to buy, he or sell, he has to shout that. So these who were these people who were shouting? These were the brokers. So they used to represent their clients. That suppose I am a client and I have a broker, and I want to sell a share of ABC company. So I used to tell to my broker. So my broker used to go on the exchange and tell, and he used to shout out loud that I want to sell ABC. Or suppose another client wants to buy ABC, so some other broker will be coming and I want to buy, and he wants to sell. So this kind of open outcry system was there, and people used to trade securities, people used to own the shares of this company likewise. Then obviously the information technology, then came telegraph, then came newspaper and telephone and other information providing technological things, which really spread the news, and trading became easy, right? After that, Bombay Stock Exchange shift to an automated or electronic trading system like what we are doing right now. But it took so much of time. It's all started in 1995, right? Before that, there was T plus 15-day settlement. Now our stocks, whatever we buy, come to our trading account, demat account, or DP Holdings, CDSL or NSDL, sorry, wherever you might be having an account, it comes in 3 days, right? Earlier, it used to come around 15 days, right? And those are physical certificates in the form of physical certificates and everything. Now everything has become electronic. So this was the transformation that took place back from 1300s to now in 2017. Obviously, things will be improving and so forth as well. So there are two major stock exchanges right now in India. That is Bombay Stock Exchange and National Stock Exchange. So, so summarizing this video, so all the reason for how stock market came into existing was because the companies need money. From 1300s to 2017, whatever companies comes, they need money for expansion. They need money for to expand their business. So so they need stock exchanges to uh, raise their capital. So this is why stock exchange is there. This was the video of history of stock exchange. Thank you from